Hello, my name is Scott Bennett, and welcome to Finding Growth Stocks. And I'm here with my incredible co-host, Kathy Donnelly. Kathy, how you doing today?
I'm doing great, Scott. Thanks for having me on. It's great to be here.
It's so great to have you. I want to just introduce Kathy really quick. So Kathy is a proprietary equity trader, and her mission is to hold stocks for as long as humanly possible, given the risk. Kathy, as well, is a three-time Ironman. Such an awesome accomplishment. And really, she is also the co-host of the Lifecycle trade, which you can see in the background. Anything I missed there, Kathy?
Well, I'll just, shout out to my co-authors, Eve Bobach, Eric Kroll, and Kurt Dale. We co-authored the Life Cycle trade together. I think it's been about 3 years or 4 years. I'm not sure. But anyway, and been sharing my research with our research with everyone. And we're hoping that, today Scott and I will give you a new little twist on how we kind of work together to find these super growth stocks using my research and his research.
Awesome. I look forward to it. I know really the mission again with finding growth stocks is to identify growth stocks that have the potential to really buck the trend. We're in a really difficult bear market right now in 2022. And there are always going to be names that do incredibly well. And there are names that are growing fast that need to be on our radar. So when the market does get a little kinder, we have our eyes on the right merchandise to help us live the best financial lives we can. So I'll turn that to you, Kathy. Why is finding super growth stocks important to you?
That's everything you said, Scott. I completely agree with. We need to be ready. It's been a very challenging market, but it can turn on a dime, and today was a really strong day. For those of you out there, you know about me and I follow Investors Business Daily. Essentially, we had a fall through day. We're back in an uptrend, so we need to be ready. And finding super growth stocks is important to me because as a child, my parents both imparted wisdom on me that I needed to be able to save for my retirement. And I needed more than just, the corporate 401k or whatever it is at your company. And, because times are changing and those pensions aren't there like they used to be. So we need to make sure that we take care of ourselves. And this is a great way to do it. And what I have fortunately been able to do for myself.
Awesome. Thanks so much for sharing that. That's actually a really good segue. Speaking of 401ks and all the different accounts, I'll share a little bit. So, how Kathy and I actually know each other for over 10 years now. Pretty incredible. I worked at Fidelity Investments for over 16 years, and I met Kathy in Colorado. I actually went per the request of one of my clients. He said, "Will you go to an Investors Business Daily?" It was an event at a local hotel, and I got to meet Kathy. And it was such a pleasure to meet her and kind of understand her situation. Is that how you recall it as well, Kathy?
Yeah, pretty much. And then I remember, you asked me to lunch and we went to lunch and I was like, oh man, this guy's going to try and sell me something.
That's hilarious.
And he did not. And he was my Fidelity person for a very long time and it was great. And basically, yeah, that's how I remember it. And we both were able to just became friends and were able to share ideas. We had the same mindset for growth stocks. So again, just a great combination, us coming together and sharing this information with you. And just because of, yeah, we have the same beliefs and have the same goals.
Absolutely. I know what I was a certified financial planner at Fidelity, and I always kind of live by the mantra is always treat people as if you would want to be treated, the golden rule. And I always think when I look back, one of the biggest life-changing events for me was back in 2008 when clients were really getting hit hard. And the beauty of the can slim or a rules-based process, and I run investwithrules.com, is to have a process when the market does get incredibly difficult to have an exit strategy to play defense. And then as well, when it's time to play offense, the best merchandise typically are the super growth stocks. So let's dive right into today's agenda. And as I'm pulling up the slides, Kathy, a quick question as a three-time Ironman, swimming, running, or biking, which one is your least favorite and your most favorite?
My most favorite is swimming. That's how I got into triathlon in the first place. I was doing bike rides out of college with friends, and I like biking, okay, but I was like, I like to swim. And my friends were like, oh, well, then you should do triathlon. So that's how I got into it because I love to swim. And then the running was just something I had to do because it was part of it. So we'll say running was my least favorite or is my least favorite, but I'm working on trying to enjoy it more.
I like it. I give you a lot of credit. I think having to go 16 hours throughout a difficult rainy Ironman, I can barely just muster 16 minutes on a jog. So diving into finding super growth stocks first, thanks for sharing that. I always find that so fascinating. And the thought of jumping in the body of water in a race with other people possibly kicking you sounds pretty remarkable if you can get through that. So here's Kathy and myself, the goal, we're going to kind of pull all the resources. We're looking for new growth stocks. We're looking for institutional money, big money, what they're looking at. And then we're also going to be looking at the trend and really going through both of our research. And today's agenda on November 10th, 2022 is we're going to be looking at the Lifecycle Trade, her book as a co-author, and Invest with Rules Research, putting them together to help us come up with good ideas. We talked a little bit about why finding growth stocks are important, and the two stocks we're going to address today are Global Foundries, GFS, and TOST, TOST, and we have the joy of TOST reported this afternoon. Before we get into the agenda, world's quickest disclosure and disclaimer, this is just information-based. It is not a solicitation in any way to go buy or sell something. Please always do your research, your homework, make sure it fits your financial plan. Talk to your personal financial advisors, but this is just information I hope you can understand. Thank you so much for understanding. Okay, let's start with Global Foundries Inc., GFS. So GFS is a semiconductor stock. They make chips globally. Their main office is in Malta, New York. Kathy, ever been to Malta, New York before?
I have not.
I think it's like a half an hour above Albany, so it's drive north. So really, in my view, again, we're going to be looking at this stock from our research perspective, but just from a foundational perspective, they do make semiconductors for mobile devices, for the automotive industry, for infrastructure like telecom, and then the old Internet of Things. They have offices all over the place. They're a very sizable organization. And let's jump into the chart. So I'll turn it to you, Kathy. We're looking at a MarketSmith weekly chart. Thank you, MarketSmith. I'll turn it to you, Kathy.
So this one caught my eye for a few reasons. One reason is, Scott and I trying to come together on how you can use our research to help find the next super growth stock, is that this was on his list. And he's going to share with you why it was on his list later. And, I thought it was a great idea to be like, well, there's a lot of IPOs out there. A lot of them have been damaged, but which ones are the billion fund managers buying? And this is one of them. So I already gave the punchline away. Sorry, Scott.
No,
But
this is great.
anyway,
No, I think it's great.
this is how we're whittling our watch list, right? Watch list, not necessarily a buy list. But this IPO'd in 2021, so fairly new company, which is what we focus on in the life cycle trade. We look at recent IPOs and we say, okay, what phase is it in since it started coming out? So you see right here, we identified pretty much three distinct phases. There's an advanced phase, which is a tradable phase, and usually one where you're in for not really a long period of time and then you're out, because most IPOs will then go through a long due diligence phase, which is the watch phase. It could be 6 months, 3-4 years. Depends on the company, where they're at and how they're, doing on their sales and earnings and things of that nature. And then of course, well, not of course, you may not be familiar, but the really gem of the phase, in my opinion, is the institutional advanced phase, which is also a tradable phase. And in my opinion, the most rewarding phase of a recent IPO. So knowing where a stock is in that life cycle is crucial to successfully trading that stock soon after its IPO. And soon again can be 6 months to 3 or 4 years from now. So now we'll go back to the chart.
Let's go back to the original.
Yeah, let's go back to the chart here. So you see, for the most part, Global Foundries has kind of been in a range of what, like between 40-ish and 80 So, that's a huge range, but it's kind of been going sideways. And so what we're going to classify that is the institutional due diligence phase. It really didn't have an IPO advance phase, meaning, yeah, there you go, Scott. Well, we don't have the actual chart, but it had built a base. It barely came out of it. And then it just went down into that institutional due diligence phase. But what's constructive about it is that it is in a range between $40 and about $80 versus having a big run up and crashing, or just going down and crashing and then going sideways. So there's not a lot of overhead resistance. And as we have identified here on the chart, we have a turbulent zone, which is essentially that prior high that it made after that IPO base. So it's right now building its first, what I would say, first mature base, because it's been more than 6 months now that the chart has been out. It has a 40-week line, and that's what I'm looking for. And it already had earnings, and it hasn't cratered like a lot of stocks out there. And today we had a follow through day. So potentially this stock may get some momentum with the help of the market to have a run. And if it does, it's going to be that institutional advance phase. And I do have to disclose that I own some of the stock. If you look on, we don't have a daily chart here, but if you look at a daily chart, I believe it had a handle or an early entry that I'm trying it on. And then of course we had earnings. So do need to disclose that there. But anyway, I think this one has potential. So that's why we're talking about it today. And now Scott is going to share with you why it was also on his radar.
Awesome. Thanks, Kathy. So yeah, I would agree. So I take some of my research, which I'll cover in just a moment, but I kind of devised a list of the stocks of the last 2 years, and I formulated it by which stocks the billion-dollar fund managers were buying and which ones were kind of in or heading towards uptrends. And I handed that list to Kathy, and GFS was on her list. Beyond just the Lifecycle trade and what you see, was there anything else that led you to pick this one out of any other one that was on the list?
Well, it just was one that looked constructive. I really didn't want to share a stock that maybe had a recent earnings and plummeted like we have seen on some of them most recently.
That makes complete sense to me. So at Invest with Rules, it's the newsletter that I run. We really look at two different things. So research part number one are what are these institutions? What are these billion-dollar fund managers buying? I'm able to ethically kind of dig through what they're buying and selling net is over the last 30 days. So 30 days ago, I'm able to kind of look at about $1 trillion worth of assets. It's not the entire universe, but it does give a little bit of an edge. And then from there, I look at the trend of the position. So if I were to dive into, let's do right here. So in particular, GFS, Global Foundries, has experienced from my research, there was some initial buying earlier in that kind of first base, but there's actually been 2 consecutive months of billion-dollar fund manager buying. So in the month of September and the month of August, there was net buying, which definitely gets on my radar. I like to see 2 or more. And then I actually drew those kind of upward facing arrows of where that would be on in a cup. So how are these cups formed? When are they doing their big buying? That's what's going on. That's how all this is kind of formed. The next piece of research that I look at, which kind of is the final piece, is just where are we within a trend? So mathematically, we're looking at only at data, not my opinion. It's just saying, are we in uptrends, neutral trends, or downtrends? And every single position must live in one of 9 stages. There's no ifs, ands, or buts. So the question is where is GFS today? The answer is it is in an uptrend. It is in a short-term and a long-term uptrend. So in theory, you've been delivered using this research 3 distinct kind of buy areas technically when you're looking at the charts. But I just think it's really interesting that when we kind of go back and look at a weekly chart of GFS, it's coming up to the top of the Market Smith base. It's heading towards the top, or kind of possibly heading back towards that turbulence, the top of the turbulence zone. So there's a chance that this one makes a big run. Before we move on to the second stock, Kathy, anything else you'd add on Global Foundries?
Yeah, I just want to reiterate what you were talking about regarding turbulence. Sometimes an IPO will power through and really not experienced much turbulence at all. Depends again on the strength of the stock and the market. It's possible a base on base could form, if it breaks out of this current base effectively, and then maybe does a base on base right below the turbulence, or breaks out above the turbulence zone and creates another base in that position. And the turbulence zone perhaps becomes support when it starts building there. So that is something to potentially expect. And so, yeah, I would just let folks know. And then I also just wanted to highlight the RS line. The RS line looks strong here. It's not at all-time highs like when the stock made an all-time high, but it's definitely going in the right direction. So that's another thing that can help clue you in as well on the strength of the stock.
Awesome. And just kind of eyeballing it, if I were to like look at maybe the top of March and draw a very long kind of diagonal trend line, was that something that you were looking at from on the daily chart, kind of a big potential kind of a trend line breakout if you were to put that on there?
Yeah, I usually use trend lines on the daily charts for early entries within the base that I learned from William O'Neill, How to Make Money in Stocks many years ago. So that's what I was using for an early entry. And then if it does actually break out, if the market continues to stay strong, then I would look to be adding at the true buy point as indicated here by MarketSmith.
Awesome. I love it. So let's move over to stock number 2. And as I head over there, full disclosure, I do own Kathy's book. I think it's so interesting to see the phases of kind of an IPO as the first 2 or 3 years kind of progress. And how do these fund managers, when do they add, and when are you kind of through a lot of their testing? Because when a lot of companies go public, they're raising lots of money for projects, and sometimes the insiders want out. So it's really good to kind of be cautious and let some of these play out. But I also think too, it's really fun to get on Kathy's calendar and hear what she's thinking. So a little bit of this is for me. So I know my research really well, but it's fun to get Kathy's involvement as well. So the stock number 2 we're going to cover today is TOST Incorporated, TOST, TOST. TOST, if you've been to maybe one of your local restaurants, whether it's the point of sale system, which they hold in their hand, where you can check out at the table, whether you order simply from your phone and they just kind of have, instead of your traditional server, they kind of have kind of a runner that comes to you. And then Toast is very similar to like a Grubhub or a DoorDash. They have a lot of different business lines, which I think makes Toast really interesting. Here are some of the pricing plans if you're a restaurant. So how much are you going to pay for the starter kit, the point of sale, how kind of developed is your restaurant? And then it's nothing beats recurring revenue. And then I assume there's some payments activity too. So they have a lot of different elements for creating revenue. Let's move over to the weekly chart of Toast, TOST. Kathy, what are you seeing here?
Yeah, well, I just want to add, I first discovered Toast during COVID, when the restaurants were shorthanded and they were looking for workers, and many restaurants are still looking for workers. And it was really interesting to show up at this restaurant where you literally just sat down, you scanned the barcode, they're like, oh, you're at table 2, and oh, you're sitting with your friend, whoever, and you just order, and then they just bring it to you, open bar, open food. And then when you're done, you just close it all on your phone, and all the servers have to do is bring you stuff versus come take your order, then go back, get your water, then come back. Are you ready? And then go back. So it actually really saved a lot of time. And I thought, wow, this is great. And many more restaurants will probably be looking at these different aspects that Toast offers, not all in that way, but just to help them run their operations more efficiently. So that's what really caught my attention. And then I happened to notice that it was a recent IPO. So I was like, perfect. So, to tie into also what Scott was saying earlier about the institutional managers, and if they're looking to buy into a stock, a lot of these IPOs don't have earnings, and Toast is a perfect example of that. They don't have earnings really right now, but they do have really strong sales. So sometimes I will definitely give an IPO a pass for that. And it may be when they do start to have earnings, that is the catalyst that gets it started into its next phase, the institutional advance phase that we were speaking of. But Toast obviously has a much different pattern than GFS. It created a base, barely broke out, and then just went into a downtrend. And we call that a pump and dump. for the most part. So Scott, you want to show that other slide really quick?
Oh, absolutely.
Yeah, so here we go. So, you know, Toast did have a base first, did kind of break out, but it looks to me more like a pump and dump, but you could also put it into a different pattern. We have like 8 different patterns we put IPOs in. And that is helpful to know because there's, depending on the pattern, you have to be aware of the resistance. And because what we saw in Toast for having such a huge downtrend, there's going to be a lot of resistance at that turbulent zone, and there's a lot of ground to make up. So now we can go back to Toast chart. Yeah. And so you see there, you have that straight downward action. So that's what was the price on there. So $60, we're at $20. That's a lot of overhead to overcome. However, you got to start somewhere. And we had the prior bottom, we've had a run up from that bottom, and now we have a base, and we have a base that's identified by Market Smith pattern recognition tool, which always is a really great thing. So we had the IPO advance failure because we didn't have an advance after that IPO base. We're in this institutional due diligence phase, which could still last another year or two. We don't know the market's going to support this stock or not. We don't know if Toast is going to have earnings, but as Scott alluded to, they did have earnings tonight, and they are up about 7% after hours. And I also need to disclose that I own some of this one as well. And I didn't pick these stocks on purpose because I own them. I picked them because there's just not a lot out there, and these are the ones I'm trying. And I just also want to clarify, these are not full positions. These are like 1% positions because this is such a volatile market, and I don't want to get hurt because there is so much volatility in these spaces. So anyway, it meets the invest with rules criteria of billion-dollar fund managers. We'll pass it back to Scott. And then it meets my criteria because it's got a first mature base built within this institutional due diligence phase, which gives it the potential to soon create that next institutional advance phase.
It also solves a very critical thing. As the father of a 3-year-old, you got to get this kid food fast when you go to a restaurant. If you also go with another family or another couple, you can't be waiting on someone ordering food. You got to get food fast. So you can just pop it in your phone, and next thing you know, a server runs up and gives your child kind of guac and chips, and you've saved the day, and there's no explosions, and everything's wonderful. So it does solve some interesting tidbits. When people take forever with the menu, that's over. And then getting food fast or faster is really fascinating. What I would share with Toast is I have seen 3 consecutive months of net billion-dollar fund manager or kind of institutional buying from what I'm looking at. And again, this is just what happened in September and August and July. So this was something that I was looking at as, okay, well, this is something interesting. So they're starting positions, and these are just kind of, I would almost call them more testing positions. They're not extremely large, but I just think it's interesting. So you can kind of see where those arrows are pointing up. That creates the end of the torture of Toast. So when it went from 60 down to, we'll call it 15-ish, that's where they started accumulating. And now you've kind of had a little bit of a run up. So maybe there's a chance the worst is behind you. Obviously, if we do head into more of a deeper economic turn down, then obviously maybe less people would kind of discretionarily go out into the restaurant world. That's always a possibility you have to think about. But it's really interesting where the restaurant world is, like everything else, changing. And there is some really good software that exists beyond just your traditional point of sale system where the server disappears for forever, puts in your order, and then you're not really involved in any capacity. The other thing I would add, so beyond just billion-dollar fund managers, what does the trend say? So the trend says neutral trend, and there's a really high probability that it's going to say uptrend tomorrow. So that's a really interesting thing. We're at this pivotal turning point where I would call this a stage 2 neutral trend. What does that really mean? That means that the short term is neutral and the long term is up. So because you've kind of, even though it looks from a weekly perspective, it has made that turn. So you can kind of see where I've pointed to. So you're at this kind of pivotal point. The earnings were the make or break moment where it's now kind of lifting in the after hours, where it could have easily just simply rolled back over and waited for the next show to start. But so I would say from a billion-dollar fund manager perspective, that the list that I gave Kathy, both of these 2 positions were institutional buying. And then the second piece is they both were kind of more attractive from a trend perspective. I'm going to move back to TOST. Any other final comments on TOST?
I guess we'll have to see what happens tomorrow with the earnings. Will the earnings from after hours tonight hold until tomorrow and make that pivot to uptrend or downtrend?
Yeah.
So to be continued. But yeah, nothing else to add.
Well, awesome. Well, again, this was our first Finding Super Growth Stocks episode. So if you liked it, love you to subscribe, give it a like, put a comment in. Love to hear your reactions and your thoughts of kind of what's on our radar. Also, you can see Kathy's handle. She's at KGD_investor at Twitter, and I'm at Invest with Rules on Twitter. Love you to check us out and follow us. And super low to no pressure whatsoever. If this research was interesting to you and you want to just go one step further, the world's best stocking stuffer, I own it, is to go to the lifecycletrade.com or simply go to Amazon and check out Kathy and her co-author's book. And if you want to check out a free webinar where I call it Get New Rules, there's buy rules, there's sell rules in regards to what these billion-dollar fund managers are buying and selling along with the trend, it's investwithrules.com. Awesome. Well, thank you so much for your time, Kathy. It's always a pleasure. Any final last words for you?
No, thank you, Scott, so much. This was a lot of fun, and I hope, like you said, everyone enjoyed it. And this is how you can find us. And yeah, if you like what we did, well, I'm sure we would love to do it again. I know I would. So let us know. And
Awesome.
if we don't see you, have a great Thanksgiving and a Merry Christmas.
Awesome. Same. I couldn't agree more. Enjoy your day, and we'll look forward to connecting soon. Thanks again.